I'm absolutely delighted to introduce Julie Wallace and Mayor Ziswiler to the podium, please. Thank you so much, please. So just basic introductions. Julie Wallace, Head of Impact at Leapfrog Investments, and Mayor Ziswiler, CEO of the UBS Optimus Foundation. Good, I've got that right. So we've got a 30-minute panel here to show the energy and the enterprise of entrepreneurship, innovation, and impact capital. So Maya, if I could come to you first. You're developing innovation through philanthropy with some really interesting tools, and I wonder if you could share some of those with us, please.
Sure, thank you, and good afternoon, everybody. It's lovely to be here. So in terms of the innovations and the tools that we have, first of all, maybe I would like to start saying that we think about philanthropy as a way to really bridge the gap between giving and investing. We feel like philanthropy is around helping to de-risk, but also helping to build partnerships so that ultimately we can unlock and catalyze more funding toward having more impact towards reaching the SDGs. And when we think about our innovations, we think about how can we provide social enterprises with the right type of capital, depending on their stage of development, to help them ultimately deliver the type of impact that they want to achieve. So maybe I'll give you some specific examples going between that giving to investing. We make, for example, convertible grants to, for example, an education social enterprise called Rising Academies that operate in Sierra Leone, Liberia, and Ghana. And that grant then converts into equity once they've been able to raise their first round of capital with commercial investors. And the grant was able to help them fine-tune their business model. So it's around public-private partnerships, it's around low-fee private schools, and it's also around digital solutions based on their curriculum. So one example of an innovative tool that we've deployed. Another example might be what we call an impact-linked loan, where basically the interest rate fluctuates based on the impact that is achieved. So we gave an impact-linked loan to a social enterprise called Hewatele, which provides low-cost oxygen in Kenya. And the aim there was to make sure that they actually reach the most remote clinics, the people that are most vulnerable. If ultimately they're not able to or don't do that, it becomes more like a commercial loan. Just two examples that we've done at the individual transaction level, but also thinking about how can we scale that through the use of blended finance. And that's how we started really piloting and then scaling those through blended finance structures. And blended finance is around making sure that we can deploy our philanthropic capital or public capital as a way to de-risk and enhance returns so we can crowd in more commercial capital. So that ultimately, hopefully, investments that maybe are not suitable for more risk-averse investors might become so because we've been able to de-risk it and enhance returns. Again, maybe two very concrete examples. One is the SDG Outcomes Fund, which is a fund that invests in outcomes contracts, where there's a 20% first loss capital there that allows development finance institutions or impact investors, family offices to come in and ensure that we have 5 times more impact because we were able to crowd in that additional funding. And a last very quick example, a structured note where there's a philanthropic liquidity guarantee, again, that enables commercial investors to come in and get market-based returns. Thanks to our proximity to UBS, we're able to do that, leveraging the distribution channel as well as the structuring. So
it's quite a range of different approaches, de-risking, catalyzing, convertibility, impact-based loans, blending outcomes, real range of diversity. Are you also using the very latest areas that are tech, blockchain, AI, and so on. Is that something that you're also looking at?
Yeah, I mean, we've been using technology for a while. It's one that we think can have a catalytic role in really basically helping these social enterprises actually getting to the most vulnerable population. So maybe a very concrete example in the measurement area, so using technology in education, where basically that technology allows to look at where students are at the very beginning, identify those that need the most support on the one hand, but also making sure that you can see when there's progress and then being able to provide the right kind of programs once you've identified that. In the health space, making sure that an organization, an investee that we have that's called Jacaranda, it's low-cost maternity clinics, making sure that they're able to be more patient-centric, so that through technology they can actually provide reminders when it comes to antenatal or postnatal care. It allows them to provide feedback. It allows them to also have support groups for each other. Or in the environment space, which is another area that we're very present in, where we're looking at using artificial intelligence as a way to monitor biodiversity. So underwater cameras can track and identify species over time, then being able to monitor and then preserve biodiversity. So just a few examples.
Just a few. They sound pretty amazing, and I love the idea of using the technology and also using just that power of bringing people together, the human and the tech together. Thank you, Julie. If I move to you, you're supporting entrepreneurs reaching out to scale, big scale. You've achieved some really big scale. How are you achieving that scale?
Great. Hi, everyone. And so nice to hear about UBS's work. So at Leapfrog, we're an impact investor focused on Africa and Asia, and we're normally investing in growth companies. So when we think about entrepreneurship and scale, we see it in two ways. So often we're investing in companies that were entrepreneur-led or founded, or a small group of entrepreneurs. And a real part of our value creation model is how can we help them scale? And so we look across really all dimensions depending upon the business model. Maybe it's governance, maybe it's financial management, maybe it's people. But a lot of our work is on helping them strengthen their product so that they can reach more emerging consumers. An example of that is we're investors in Good Life Pharmacy in East Africa, and we worked with them to build a digital pharmacy, which is now 15% of their revenue, but they're able to reach many more emerging consumers through that vehicle. The other way we think about entrepreneurship is we're investing in financial services companies. They could have been started by an entrepreneur, but they are playing a key role in driving entrepreneurship in their local economies where they operate. So we, through Clinton Global Initiative, which sort of kick-started again a couple of years ago, we made a commitment about really trying to understand those micro and small and medium-sized enterprises that our financial institutions are providing loans to. So as of last year, that was 17 million MSMEs across our market. So we're trying to really support entrepreneurship on those two levels across our portfolio.
Did I hear that right? 17
You
million?
did. I double-checked a couple of times because I thought the same, 17 million. But we've got a big presence in financial services companies.
So that's big scale in terms of the numbers of MSMEs.
Exactly.
As they grow, comes the challenge of keeping the impact clear, solid, and so on. How do you handle that?
And on that aspect, again, I think there's two ways that we think about it. So I just mentioned that when we invest in a company, we're thinking about how do we help them grow, and we create sort of an end-to-end value creation plan. But that value creation plan is all about not just profit and growth, but depth of impact and the reach of that impact. So we're constantly looking at those products and services that are most impactful in reaching emerging consumers and trying to help companies have more of those. So micro-insurance products or Good Life, as I mentioned, more appropriate pharmaceutical options in countries where there's risk around quality. So we really try to make sure all the value creation ties back to impact. And then the second point is around impact measurement, which I think everyone here knows very well. We think of profit and purpose side by side. So we're gathering impact data every quarter, but we're also using that data. So we're sitting with our deal teams and saying, your companies had this revenue increase, but their depth of impact has decreased. Why is that? So we're looking at that constantly, every quarter and every year, so it's not an afterthought. And I think by keeping that clear focus throughout, you're able to sort of have that intentionality throughout your investment. It's not make an investment and 5 years later try to figure out if there was some type of impact.
Yeah, and sometimes are you getting external funds which might dilute your ability to hold that?
That's a really interesting one because I've been at Leapfrog for just over a year, and we often get asked that question. You're part of the investment pool. Why are they doing impact? Why are they working with you on this? But I have not come across that challenge, and I think it's because it's this intentionality, and I really love that research from Impact Management Project. That website's got great information. That intentionality of why we're making that investment, what is that management team wanting to deliver. I think because of that alignment, it allows us to really work on impact value creation throughout. We don't have a constraint of people saying, no, we don't want to have impact.
That's really great to hear. And I'm just thinking, and perhaps this is a little bit off the cuff on this, but Maya, you're using philanthropy and some very novel approaches with philanthropy. Julie, you're using investment. Do you use philanthropy as well, or? Not at Leapfrog.
I think my past career I've used a lot of philanthropy, and I think, again, UBS's sort of modeling and leadership there is really great for the industry. But at Leapfrog, we're not using philanthropic capital.
And Maya, would you look to an organization like Leapfrog as part of a philanthropic approach? It's not going to be Leapfrog because you're not doing it, but similar organizations.
Well, I think if the goal of philanthropy is to be value adding, so to the extent that philanthropy is not needed, that's great. So if Leapfrog doesn't need philanthropy, then we absolutely wouldn't want to get involved with an organization that doesn't need philanthropy. But what we do is we come in as a very early stage investor, and using our philanthropy where we're able to take more risks. So it is a normal investment in the sense that it could be an equity or a debt investment, but it's one where often other investors feel like it's too early, they don't feel like it meets their kind of risk-adjusted return. And often what we see is that once we come in the second round, we then are able to crowd in more commercial funding. So that's the role that we play, is hopefully catalyzing others to come on board, either directly or in a blended structure that enables that as one rather than just side by side.
Yeah. That's really helpful, thank you. Now, obviously, we know we've got some really major challenges ahead. Climate, oceans, biodiversity, all the related harms around that, and it seems to be speeding up very rapidly. So looking at what can be done, Julie, if I can come to you first on this one, just looking at climate, how are you seeing the changes that are caused by climate? What are you doing to support your portfolio on this?
Great. So I think around the world, we're all now obviously very focused on the climate transition. And at Leapfrog, we started as a social focus, health and financial services. And the last 2 years really been integrating climate into everything we're doing, all of our strategy and all of our engagement with portfolio companies, and building on, I think many in this room probably contributed to the G7 impact work around just transition. So trying to make sure that just transition is underpinning our strategy. but really practically, measure so that you can manage your risks around emissions and understand your emissions. And we've been doing that across our portfolio. And then once you've sort of measured it and you understand your challenges, trying to look at your products and services and thinking about how those can be focused on climate opportunities. And then third, doing a lot of training of our internal colleagues who at Leapfrog, fortunately, really impact-minded, but a lot of the background was on social impact. So just really training continually on climate. We started that this year and we'll continue it into next year.
Are there any specific organizations that you've funded that you've had to change significantly because of climate change?
Well, this is an interesting one. So I think the external environment is very focused on climate, and we also see from our LPs that it's an expectation that we're robust on climate. Going to my earlier comment, I'm surprised because we don't get pushback from our portfolio companies, but we have gotten a lot of questions. I think sometimes, at least to me, the climate language can be confusing. Something simple sounds complex. And so we've really just one-on-one, we're going through this process now, taking time, speaking to the companies, making tools, helping them, bringing in consultants. So I think if you can make it tangible and less complex, then people want to do it. But when you send them, I don't know who here has done a TCFD, but if you just send someone this giant spreadsheet with all these data points, they're quite confused. But if you can stop and pause and break it down, we're getting good interaction.
That sounds good. That sounds really good. I should say we are going to have some time for Q&A. You will notice that on each of the sets of stairs, there are some microphones. So please, if you want to ask a question to us, come and stand by one or other of the microphones. That would be really great. Thank you. So coming to Maya, one of the other things that's coming very, very quickly is AI. Do you think there will be changes with AI in terms of your style of work or with the people and organizations that you're working with?
So let me start by saying I'm not an AI expert, but I can certainly comment on some of the changes and trends that we're seeing. So I'll focus on the areas that we invest in. So in overall, what we're seeing is AI can have a huge impact on data analytics and insights. So really, we can see AI processing vast amounts of data quickly, helping organizations better understand and continuously learn about the impact of their activities. So hopefully that will help decision making. So that, I think, the use of AI as a way of monitoring and evaluating is one that we see as very promising. Then in some of the thematic areas that we work, I mentioned in the health space, we support quite a number of investees that have started integrating AI in the work that they do, both to improve access to healthcare, but also quality of healthcare through telemedicine, diagnostics, drug discovery, and really particularly focusing on serving the most vulnerable. In the environmental space, AI really playing a prominent role in terms of helping to monitor and preserve not only biodiversity that I mentioned, I gave the example earlier, but also to aid in wildlife protection, fight against poaching or illegal fishing, using autonomous surveillance systems. So again, one that I think is definitely, you see a lot of improvement in that area. In education, AI-driven personalized learning platform. So basically one that adapts to the child at the level where it's at, and therefore reaching also individuals that maybe don't have access to education. Of course, COVID was huge in kind of bringing that to the forefront. I mean, I think we're all aware of some of the dangers around AI, ethics, governance, its correct use, but hopefully used properly, it can actually help address some of the concerns around, on the one hand, bias, and there's a lot around colonization of development, so kind of introducing that is kind of preventing that, but also transparency. And I know there's a lot of talk in this conference around impact transparency, but AI to help bringing about some of that transparency.
So at the moment, what you're seeing is the positives. You're seeing new
Yes, you can see it as a potential
Yeah.
force for good, yes.
Yeah.
And
Yeah.
I say potential because of obviously some of the risks associated with it.
Indeed, and maybe we hit some of those problems a little bit along the line, but great to have those. I am just saying again, we do have time for some questions, so please do come here. And because if we can just about do it, I'm just wondering about a show of hands, just to get people motivated a little bit. Do you, in the folks here, if we can have a look, do you believe that impact capital will substantially boost innovation and entrepreneurship in the next few years? If you put your hands up, please. Oh, that's almost anybody. Does anybody put their hands up for no? We're not going to have that substantial. I won't be able to see who's who, so you're no, I don't see anybody. So there's a very positive view, Please do throw us some questions. Otherwise, I'm going to have to throw some more, and that could be tricky. But
Please ask some questions.
Please ask some questions. But meanwhile, let's look into the future. Let's look into 3 to 5 years' time. For each of you, what would be your ambition to have achieved by, let's say, 5 years' time?
Starting with me.
Please.
Okay, great. Well, I mean, I think it's been incredible, the last few years and the momentum around sustainability and impact investing. So for the next 3 years, I've got a 3-year and a 5-year plan. The next 3 years, just really the integration of robust data and evidence. So we sort of quieting the critics. And I think this morning's session about accounting and financial metrics, we just make this mainstream. And then in 5 years, I borrowed from Cliff from your website, but I agree with your website. It says on GSG's website, a worldwide shift towards impact economics. So, really getting to that point where this is just mainstream and social and economic value are considered side by side in that vision of impact economics.
Thank you very much. So, impact economies, robust metrics. Maya, what's your 5 years?
Well, I'm going to have to agree with you. I mean, I think what we've been hearing today and this morning, achieving this impact economy where social and environmental outcomes are built into investment and business decisions. So, and that it's a system where impact can be transparently not only measured, but managed and communicated. We'd like to see a shift from referring to market-based returns to like impact-adjusted returns. And maybe something that gives us hope is some of the surveys that UBS has done in the recent years, where 95% of billionaires that were surveyed want to lead the way in actually having an impact, not just with their philanthropy, but also with their business and their investment. And the other interesting stat is 60% of wealth is going to get transferred to next gen and women, and they see that the way that they want to spend their wealth is on impact. So those two stats give me hope that there is a demand for impact transparency, and it's going to become a key pillar for it to become more
Fantastic.
mainstream.
So robust metrics, impact economies, impact built in, I like that, impact adjusted returns. And it's the wealthy who will be leading the way. That's interesting. Now, we do have some questions. Please, over here first.
Hi, I'm Courtney Roberts, CEO of Moonshot Global. And I'm really happy to be asking this question to leaders in the field. So please take that as the framing. So the question is, and Maya, you just mentioned impact-adjusted returns. I was wondering what both of you think, because you're so focused on impact already, about the idea of monetizing prospective impact. Obviously impact accounting is amazing, but it may be sometimes off. But we can already monetize prospective impact. I'm just wondering at what your positions are on that and whether you've experienced anything with any of your investments about that.
Thank you. While our wonderful panelists are thinking about that, over here, please.
Thank you, Cliff. My name is Peter Patashka. I'm the CEO of Cambio Consultancy, and we focus very much on support directly for social entrepreneurs as well as ESG consultancy, and thank you for the conversation so far. My question is simple. I represent market builders and ecosystem builders. How can we work together to solve some of these challenges. The array of products that you both have shared is bewildering and beyond my knowledge. How do we get those out there into the wider world? How can we support you to do that?
Wonderful. Thank you, Peter. Maya, could you take Courtney's question? Monetizing prospective impact.
Sure. I think we've seen some progress, particularly in the kind of more on the environmental side around that space, and I think we still have a ways to go on the social side, because I don't think there's an agreement in terms of what social impact standards are, and that's certainly an area that we're interested in doing some more work on. Is maybe co-developing something like an impact rating tool around different dimensions, breadth, depth, and sustainability impact, to allow a certain type of monetization. Are we there yet? No, we're not there yet, but we're certainly kind of going on that journey. So progress more on the environmental side with carbon and other credits, less so, I think, on the social side.
Interesting, thank you. And Julie, would you pick up Peter's comment?
Great, yes. I mean, I think in the impact space, we've got a lot of great industry groups and organizing bodies. I mean, I've just been amazed at all the country-level platforms here. So I think maybe it's using these existing vehicles and channels to try to bring more partners together around impact. Not necessarily creating new ones, but trying to use the good organizations that are in place now.
Thank you. And more questions from the audience here? No. Okay. In which case, you've put forward your 5-year plans. What do you think you can achieve in 1 year's time? What will be different? Julie, what will be different for
the world, or for
I think for your work, for the impact movement.
I mean, I'll just speak to impact, which is what I focus on. I mean, we're really trying to. We already have rigor in all of our data, but we're just trying to simplify and streamline the collection of the data so that we can go deeper on analysis and really use those impact insights to help companies perform better, but also to start thinking about some of the deeper measurement around profit and purpose. I think a lot of us who've been in impact for a long time, we gather all of this information, but then maybe we run out of time to analyze it in a really deep and meaningful way. So that's our intention over the next year.
Thank you. And next year for you, 1 year?
Maybe just picking up also on the question that was asked in terms of the monetizing the impact. That I'm hoping that with some of the work that's been done on one hand on the outcomes contract world, but also as we're seeing some progress, again, thinking about leveraging rating agencies or others around creating an impact rating system. Hopefully that is something where we can maybe not yet launch it, but at least create a coalition of organizations and industries that might come together around that idea.
That's fantastic. Thank you, both of you, for this. I think what we've heard from you is that there's already some really wonderful, very original ideas being turned into practice. There's also scale and the ways in which you can achieve greater scale, more impact, more solid impact, and so on. In a year's time, we're looking at some of that monetization, some of the streamlining, getting more depth into the impact, and looking further along, maybe 5 years at a time, really robust data, impact economies, impact being built in, impact adjusted returns, and it's the people with wealth who will be leading the way. Thank you very much for this panel. Thanks to both of our panelists here, and thanks to everybody else for listening. Thank you.
Thank you. Thank you.